Welcome everybody out there to our next webinar here at JFD Brokers. A warm welcome in the name of JFD Brokers as well. My name is Stefan Friedrichowski, and I'm not alone today. There's somebody else here. Jens is within the webinar as well. Hello, Jens.
Hello. Can everyone hear me?
Oh, your voice is a little bit low, but maybe that was only at my end. Hopefully, it works better in a second.
Okay.
Oh yeah, that's great. That's
better. Okay.
Sounds much better. Yeah, today, the 19th of April 2018, 7 p.m. At least in Germany and those other countries around. It's a pleasure for us to have you here. I get a notice here that somebody is astonished that this webinar is in English. Yeah, but maybe a remark to that in general. We have always the webinars in German and English. It's typically always the next day. So if somebody is especially interested in the same webinar in German, then there are already recordings of that webinar around, because you always find the recordings of any webinar from me, from Jens, from anybody else from JFD, directly at the JFD YouTube channel. And if you press exactly JFD YouTube channel in Google, then you will be directly linked to that web page, and you find the recordings of any webinar there, latest the day after the official time of the webinar. So in case it's a problem with the English here, you have the opportunity in German as well, and the recordings are already uploaded. So that about recordings in general, and especially for today. Today's topic is once again JFD Basket Portfolio, because we decided to say it's a good thing to talk after 1 month once again about the basket, to really share performance figures with you and to share additional strategies with you as well, because it's not exactly the copy of last time webinar. It's what JFD stands for. It's exactly transparency, what we want to achieve. And that means we talk about the results and we make them public. Of course, those of you who are already invested in the JFD basket portfolio, then you definitely get your monthly report. But I think not everybody here is already invested. But let's see. What we can change maybe today. So it's again JFD Basket Portfolio. It's something like a product. Yes, we talk about a product. That means in general, it's a little bit advertisement for that, but in the sense we do webinars. That means we want to transfer knowledge as well, because we talk about trading strategies, risk allocation, and some other things. So that, as always, we try to achieve that you can learn something else and not just looking to an advertisement video. So that's definitely not what we want to achieve here. You find already the slides of today in the GoToWebinar control panel. So that means you can download them if you like, or if you have any questions later, you can get in touch directly with me, with Jens, and you saw already the email address. They are on the slides, so it's no problem to get in touch with us. You know, I have always to show once the slides. It's a risk disclaimer about what you do with trading strategies, what you learn within webinars. When you finally trade, you trade for your own, especially when we later show two other strategies in more detail. If you trade them, then you trade on your own responsibility. But I think that's self-explaining, and it's said now. A little bit more in detail, what are the topics? We want to share with you that, as always, behind the scene are people. And so we have to introduce ourselves so that you know who is managing that kind of account. Because on the one hand, we talk about money, but finally, we talk about people. And that's important to know who is doing what, why, and that you know a little bit more about those people being involved here. Of course, we talk a little bit more in detail how we trade and what we trade, what kind of underlyings, and so on. We put another topic here for today that is, and you may have heard of that already, that is so-called ESMA regulation changes, which are coming in a couple of weeks, or maybe 2 or 3 months. And it's all around what is the impact on trading in general, and especially what might be the impact on JFD basket portfolio. The good news is you will learn that we are not really affected here, but we want to give you some additional information about the ESMA regulations and changes for CFD trading here within that webinar as well. Then we go to the big picture of strategies, how they perform. You will see a little bit more performance figures of individual strategies, and then 2 strategies once again in detail, not the same than 1 month ago. We talk about today about breakout trades on DAX and S&P 500, and as well as on gold. That are 2 strategies within the portfolio, and you will learn all the details and time frames, parameter settings in order to even duplicate the strategies for your own without directly following or investing into the JFD basket portfolio. Finally, we want to touch the topic of risk management, because that's besides the fact that you need profitable strategies, it's the most important aspect of trading in general, especially if you are trading in a more professional way and if you have a complete portfolio of strategies, then risk management is key for success. Finally, of course, a little bit about how to participate within the JFD basket portfolio. But let's start with the people. And the people being involved are mainly Jens, me, then there's another one, Plamen, from JFD directly from headquarter. And I want to mention one guy additionally here, that is Peter Milner, who is coding the expert advisors for those strategies which are running automatically. But let's really start with those who are behind the basket portfolio. And let's start with Jens.
Yes, sure. Thanks a lot for the very nice introduction, Stefan. What shall I say about my person? So currently, I'm working as the global head of research and education at JFD Brokers, and not only that, but also I'm offering a managed account under. I offered a managed account under the licensed umbrella from JFD. I started out with this project already in September 2016. You will probably hear about this a little more later on. Then at the beginning of 2018, and after being quite successful with this project, JFD asked whether we probably should expand this corporation a little in terms of managing clients' money here, together with Stefan, give my in fact discretionary approach, which I will introduce a little later on too. What's the word for adding? Adding is the word I was looking for. Adding some more quantitative trading approaches to it, and this is where Stefan comes into play. And in fact, that's a little around my person. So I'm trading the markets for something like I don't know, over 10 years. I started out as a trading assistant, quite classically, at a stockbroker here in Germany, and learned trading from scratch there. And from there, everything went the way it went, let's say. And today I'm sitting here, and I'm really happy to be here.
Thanks very much, Jens. And Jens is, by the way, sitting in Berlin, the capital of Germany.
Yes,
I'm 200 kilometers to the south of Berlin, close to Dresden. And you see how everything is running. I mean, the world today is full of computers, and we have all the capabilities and opportunities to do it from home. So that's quite excellent. Yeah, and a little bit about more about me. So Jens is really, let's say, out of the financial scene. My background is totally different. So I have studied physics and I have worked in physics for nearly 2 decades, and then I transferred to the financial scene. But still, I have always the view of a physician about trading. That means I look to everything a little bit more mathematically, a little bit more statistically. But finally, and that's always amazing, is especially between Jens and me, the final view quite similar, but it's a perfect combination of what we have here. And it's a great team. To be part of that is even very good. And that finally, if a little bit more what I do here is, to derive trading strategies which have a profitable edge, that we know that what we do is profitable. At least it has been proven to be profitable in the past. And since the methodologies I apply there, I try to make sure, I cannot guarantee anything, as always when it comes to trading, that the things I derived from history, that they have a good chance in the future as well. Yeah, so that's my part within the JFD basket portfolio. And it's a combination of different skills, and that's what you need for such a project. Of course, what are we doing here? What is the JFD basket portfolio at all? So, strictly speaking, it's an investment product for private and institutional investors. And we always say in the same line that it is a conservative instrument, because what we try to achieve is a moderate return with low risk, and it's not maybe the way most of the traders are doing. They try to double their account in 2 months or whatever, dreaming of extremely high returns. No, that's not our philosophy behind. It's really reducing risk, have a low risk, and still have some return, and beating at least people in the same environment, and it looks good, so to say. What are we doing exactly? We have 9 individual strategies which create that kind of portfolio. So we have a very diversified basket and trading approach here, and it's that we have about 80% is being traded automatically and 20% is discretionary. And if I write down those numbers, what do I mean with 80% and 20? It's not the number of trades. No, it's the risk allocation behind, because when you do trading professional, then it's all about risk, and those numbers reflect exactly the risk behind those kind of proportions. And we trade forex, indices, gold, CFDs. At least up to now, we might have in future other instruments as well, but that's what we do basically here all the days. And you see already a table with a performance of long-term history, which is everything is live. So it's no back testing. We have back tests for all those strategies more than 10 years, but I could share those as well, but that's not really what counts. It's always what counts is what we have in live accounts. And we have a long history already, starting in 2016, thanks to Jens, who has started that business already early. And Then within February, we made a decision to have other instruments and other trading strategies to come in place as well. Those strategies have a history of about 1 year in live accounts, not being reflected in those numbers, but we have those histories. And the good thing is it works well. And you see, last month's result was the best ever up to now. So 3% growth in a single month, which is absolutely outstanding, and it's even more than we would expect. Therefore, if you ask myself, can we have that number every month? Straight answer, no. That would not reflect the philosophy of those strategies. And of course, it would be nice, but that's not what I think we can repeat every month. But nevertheless, it was a great month in March. But you see some more about performance later. Now, since a couple of weeks, we have some news about the regulations of CFD trading, and therefore we change for a few minutes here the topic because it's quite important for traders at all, and therefore let's spend some minutes here as well because it might have an impact on the basket portfolio. It definitely will have an impact on your personal trading, but maybe Jens, you can explain it much better than I can.
You mean the way I am trading?
No, about the impact.
I'm sorry. Yes, I already jumped to the next. I'm sorry. Yes, I'm sorry. That was yesterday. That was also a topic, and I thought you already had to say it. I'm sorry. No. Okay. Yes. Sure. So first of all, I think the main question is our product in any way affected by this decision? And the clear answer is no. And the reason to this is quite simple. Oh, by the way, probably it makes sense, as it did yesterday, to have a look here at the chart, which I already presented yesterday. 1 second, I just see whether where do I have it here? So I had it open already today because there was a webinar here in Germany together with Chris, the head of German-speaking markets, and I showed this chart there too. But first of all, let me just see. So first of all, here, so this is my screen. So now you should see a chart, and nevertheless, I want to, 1 second, where is it? Where is it? Where is it? Here. There we go. So there we go. So as you can see, traders who are profitable, and as you can see here, this is the x-axis. So there you can see the leverage those traders were using in their trading. So it's less than 5-to-1, and that coincided here with 40% of the people being profitable. While a leverage, and in this case, by the way, we are talking about the effective leverage. So it's not the a nominal leverage, which is attacked from the ESMA decision here. So that said, what does it mean in this context? What I can show you, by the way, is something I have prepared here too. 1 second. I'll just bring this over here. So as you can see here, this is the website from the ESMA. It says agrees to prohibit binary options. This is highly welcome, and restrict CFDs to protect retail investors. This is a question. Well, on the one hand, we can, as we will see here with the effective leverage, we will agree that this is a good decision. On the other hand, I think 98% of the people voted against this decision. So not sure whether you should bring up such a prohibition here if nearly 100% of the people are against it. That there's nothing so much in common with democracy, but this is a different topic. So let's look here at those agreed measures, and there you can see that they restricted the leverage, for example, to 30-1 for major currency pairs, or 20-1 for non-major currency pairs. This is minors like Euro GBP. Is Euro GBP a minor? Can we consider it like that? Not sure.
I don't know.
But Australian dollar, Japanese yen, let's say, that's definitely a minor. So, and this is restricted to 20-1 here, but also this counts for gold, but also major indices, for example. And here, other commodities, or other than gold, other commodities, this also includes a crude oil, for example, cryptocurrencies 2-1, for example. However, the thing is that this is here, we're referring to the so-called nominal leverage. The thing is that here, this chart shows the so-called effective leverage. And the effective leverage is defined as the units you trade, like let's say one lot, which equals to 100,000 units in, let's say, Euro USD. And then you divide this number by the account size. And let's say you're trading a 10,000 euro account, you divide 100 by 10 or 100,000 by 10,000, and then you get 10-1. So this is the effective leverage. And this chart illustrates that the lesser the or the lower the effective leverage is, the more likely it is that the traders are profitable. So the effective leverage, in fact, has never been and will never be a topic in our basket investors portfolio. In fact, it does not even affect my private trading, because leverage and the low leverage in my trading has always been a very important topic, because I know about this correlation between profitability in trading and effective leverage, and it increases the chances of doing the right things in your trading. For example, being capable of letting winning trades run, cutting losing trades short, and not being affected by cognitive biases and that stuff. It increases the chances dramatically. And so to make long things short, I think the effective leverage we are using in our basket is, if it's 1-1, then it's quite high, I think. I think we're even below this threshold, because our approach from a risk and money management perspective is a very conservative one, in fact. Yes, and these are my thoughts around the ESMA.
Very good. Let me bring back my screen just a second. So here we go, hopefully. So in general, it affects everybody who's trading, but and whether that will protect anybody in the final end, I don't know. But at least from my end, I do not really comment on that decision, which is more important for me and for the JFD basket portfolio. Are we prepared? And the answer is yes. And as Jens pointed out, our effective leverage is extremely small, and it will be that way. So, having said that we are not affected, let's go back to strategies and the overall performance of the portfolio. Let me have a first view here on the JFD basket, and you see once again the monthly return table as before, but we can have a look here as well to individual trades, and or even let's scale it for the last months, what we have done since then, that you get a feeling of how our performance is running. And then let's have a chart on that. Let's do it relatively, that's a little more speaking, so to say. So you see the results since the 1st of March last month. So that's 10 days after we made changes to the basket. And you will see for individual strategies longer history as well. You see it really works great. we have been already at 3.5 and now going a little bit down. But what's important is that those spikes, those drawdown movements, that those are small, and that's exactly what we try to achieve here, to have it really smooth and not over trading the account. Definitely no. Everything is really conservative here. And if we look a little bit more to the individual strategies, let's first have an overview here on my slide. You know that we have a history in total from 2016, and then we have those additional 8 strategies with a history of about 1 year now. And today last time we talked a little bit more in detail about the 2 blue marked strategies here. Today we go for the green. Gold and DAX and S&P 500, and we have additional other 4 strategies here within the basket portfolio. And if we look a little bit to the individual performance of those, then we can do it here. That's starting last summer. And you see all for each of those strategies an individual percentage growth. And you see that not everything is straight going north. Of course, no. We have even strategies like the blue one here, right after the start going south, then recovering still in profitable region right now. And I know that it's hard to read the first line here, but it might not tell you anything even. So let me comment directly which is strategy is which color. And if you look, for example, to the red one, that's the breakout Euro Japanese yen we discussed a month ago in more detail. Really great strategy, more or less smooth going north. Then we have another one. This,
by the way, just if I'm allowed to interrupt you, Euro Japanese yen just triggered our take profit several minutes ago. So yes, it worked out really nice today.
Okay, if you say that, then let me have an additional view on that, going directly into that account. And yeah, as you said, you see a green line here. Normally that trade is, if it not reaches a stop loss or take profit within the day, it's closed at 10 German time in the evening. And since it's already closed, that means exactly what you have said. It's in the take profit. If you look back, because if I have it here already now, you see for the last 5 days, 3 red lines, meaning that have been loser trades, and 2 green ones. But if I would sum them up, it would be already within 1 week a profitable region. So that's exactly that strategy. And what you see here is really the real account of that sub strategy. And technically speaking, what happens to the basket? Those sub accounts are more or less mirrored into the basket, and therefore I can have here still a look to the individual strategy in a single account and looking for those results here. So it's really a nice strategy, and we have an ebook for that strategy, and you can have it still. We mentioned that last time, and it's still available, of course. So if you have interest in more details about that strategy, we can send around that ebook. And going back here to the picture of individual contributions. For example, you see that, let's call it a brown, or I cannot really say the color name here. So this one here, the brown line, that is the one we discussed today. That is DAX and S&P 500 breakout trades. And you see what happens there. For a long time, it was a little bit more flat. And then with upcoming volatility, that strategy develops quite well. But even before, it has been profitable already, so that's very nice as well. And we have some others here which go straight, steady with small amounts, but only north. That's good as well. Those are the one on the lower end of my list. And even if the last one here is the GOAT strategy, I want to mention that as well, because since 1 year, it did around 10%, because the history of that account is a little bit older than I started here. So even that one is doing quite well. So that's for some individual strategies. And let's jump into those individual here directly. How do they work? And since I want to start with the DAX and S&P 500, which is doing quite well over the last couple of weeks, especially, and is extremely profitable for 1 year history. Let's talk about how breakout strategies work in general. Even I have the same picture about Euro Japanese yen here, but I just want to illustrate breakout strategies in general. And breakout strategies are quite simple because what you start simply with two times. So two vertical lines within the chart. One is here at midnight, and the other one is at 8 o'clock. So we have a time period here, and now what we ask ourselves is, within the time period, what is the price range? So from the time range, midnight to 8, we can build up the price range. In this case, it's the upper end is here, the red line, and the lower end is that line here, that gray line here. So we have a price range. And now the principle of breakout strategies is, when it comes to 8 o'clock, the end of our time range, time period, then we place two orders: a buy stop order at the upper end and a sell stop order at the lower end. And then we wait. And those two orders are normally OCO, which means one cancels the other. So if one is triggered, you simply cancel, you delete the other one. What about stop loss? Stop loss is quite easy here within that strategy. It's always the opposite range. That means the sell stop order here has a stop loss exactly here at the red line, and vice versa. In my case, a few hours after 8, I think it's 2 hours here, later the short has been triggered, and of course, whenever somebody is talking about a strategy, definitely he will take an example which works perfectly, but today I have a live result as well for that one. But anyhow, so price went further south, and that's exactly what breakout strategies aim for. So if there's a move, please in one direction, so sustainable, so to say. And here we reach a couple of hours later our take profit level. And of course, we have to ask, what is the take profit distance? What is the risk reward ratio? And in my example on the slide here, I have a risk reward ratio of exactly 1, because the distance between stop loss and entry is exactly the same distance between entry and take profit. That's the risk reward ratio 1, and that's all. If you look a little bit more mathematically on that kind of strategy, then you realize immediately that we have at least 3 degrees of freedom, or parameters. We have 2 times, one the range start time and the other one the range end time. So in principle, I can go for 1 o'clock to 10 o'clock, or 8 to 12, or whatever. Lots of combinations are possible. So that are 2 degrees of freedom, 2 parameters, and the third one is a take profit multiplier. My example is risk reward ratio of 1, but of course I could go for risk reward ratio of 2 or 3 or whatever. And that's breakout strategies. More are possible, more parameters, and we use them. for those mentioned already, what we typically use additionally are EMAs to have a trend filter. So that means we not go for both trade directions, only for one. So only in favor of the overall EMA direction. And the other one is we might use is something like a minimum range. And the reason for that is if the range is extremely small. So if you think about if you calculate the distance in percentage, upper and lower end, and if that range is extremely small, then going for a trade here doesn't make sense, because a little bit up and down, some price movements, some random movements even, would kick you out of the trade, and therefore to have something like a minimum range is always good for those strategies as well. A little bit more detail for the DAX and S&P 500 trades. We have 6 sub-strategies within that strategy, and you see even that we have more diversification within the portfolio. If I say we have 9 strategies, but there are always sub-strategies, so it's even diversified more than just 9 strategies. In this case, we have 3 sub-strategies for DAX and 3 sub-strategies for S&P 500. And you see always we have different range times here. And if I say 11:39, what I mean here is, finally I mean 11:40, but it's exactly at 11:40 we place the order, if we place those order. And that if means we only place orders if the minimum range, in this case 0.2%, is exceeded. So only then we place orders. And you see different risk reward ratios and different EMAs for those sub-strategies. For a long time, S&P 500 has had no trades, or very less trades. Since now 2 or 3 months, we have more volatility in the market for S&P 500 as well. And then we have trades there as well. Let's have a look directly into the account here. Then we can see how it looks today. And you see two main charts. One is the S&P 500 on the left hand, and you see on the right hand here in the middle the DAX. And you can easily realize that we have 2 open trades. We have a short trade for DAX being in the profit region right now, and we have a short trade for S&P 500 as well. But you might say, hey, there have been 6 strategies. Why not having 6 trades? Okay, there might be a profit or stop loss already, but in this case, no. If you read a little bit here, in the small letters within the chart in the white, then you can realize range smaller than minimum. Oh, that means for the first trade, no trade, because the range has been too small. And the third one as well here. So there was only one trading possibility for today within the DAX. Same for S&P 500. Out of the 3, 2 have not exceeded the minimum range, and therefore no trade. And now we have a good overall situation, and maybe Jens, we can go for that together a little bit, because what I would like to share here is that for today we have maybe the one or the other may call it a strange situation. I have a DAX chart here, and we have short trades and long trades, and you know already the short trades are from that breakout strategy. I think you have opened a long trade today, is that right?
Yes, I'm long. Yeah, unfortunately I'm long, because it's not funny. We're not talking about a big development today, but probably you can remember what I said yesterday. Yesterday I was short, and I said it would have been nice if the market takes on some momentum here. And I think there's a good target on the downside against which probably we will trigger long then, which can be found around 12,500 to 520 points. And as far as it seems here, the market really made it to this region. Today, unfortunately, the system today triggered a long position, which, yeah, so far is not working out so well. But yes, I'm long, to make long things short.
Okay, but maybe it's a good time that you comment a little bit, because we haven't touched that topic up to now, the kind of discretionary approach of, so I think you have a really cool solution for combination of discretionary and rule-based trading, isn't it?
Yes, I would call it a cool solution too, yes. Yeah, thank you very much for this feedback. This is much appreciated. Yeah, so in fact, I'm always a little smiling when someone calls my trading a discretionary approach, even though it is in fact discretionary approach. But I think many people out there probably think about discretionary trading in a way which is like freestyle. So I have a gut feeling, and that's why I go long or short. And in fact, my trading, in fact, is completely different from that. But nevertheless, it's still a discretionary approach. So to give a better idea of what I do is I'm trading a profitable basic strategy. Profitable basic strategy means nothing more than I know that the strategy, if I just run the strategy, is profitable in its basic version, so it trades with a positive expected value. Let's assume that the expected value is something like 10 cents per euro we risk. That means nothing more than, let's say we risk 1,000 euros, that on average we make 100 euros per trade. And it doesn't matter whether it's a winning or a losing trade. Now the thing is that my target as a discretionary trader then is, or thanks to my experience or my knowledge or my way of managing trades on an intraday time frame, my target is to increase this expected value to a high level. So it means if I have an expected value of 10 cents, my target is, for example, to bring this to 11 cents or 12 cents. So which may, at first glance, look very, very small, is in fact a change of 10 to 20%. So if you want, my target is to increase the profitability of a trading approach by another 10 to 20%. So in this context, for example, it is that I have a clear exit rule the system lives by, and then I try to optimize this exit. For example, let's just imagine that today the market, I was short instead of being long now, and the market is trading towards a region I consider to be a potential strong intraday support, which is somewhere around 12,500 points, as already mentioned. What I then look for is to probably scale out at least something like half of the position in this region. And if the market really finds support there and trades higher from there, and the rest of the position is then taken out break even, for example, so plus minus zero, I have, compared to the basic strategy, a better result, which means something like I probably scored 50 points plus, while the strategy itself only scored 10 points. And then the difference is 40 points. And I track this in a very simple way. So I have the basic strategy, which runs on a demo account. And then I trade this basic strategy with the discretionary approach on the live account. And at the end of the day, I look how I performed compared to the basic strategy. So if I was better, the result is plus. Let's say I'm 20 points better, then the result is plus 20 in my journal. If I was if I performed less good, or let's say worse than the basic strategy, it's a minus, which means something like I performed minus 20%. 20 points compared to the basic strategy. And what I then do is that I sum up these numbers, and I look after, let's say, 50 to 100 trades, for example, if I performed better or worse compared to the basic strategy. So currently, for example, what I can say is that from the day we started with this basket portfolio, that was, I think, on the 19th of February. So we are talking about 2 months from back from now, that I'm currently ahead plus something like 300 points, 320 or so. That means that I performed 300 points better than the basic strategy. And this was thanks to, for example, scaling out of winning positions, or scoring a smaller loss, for example, or sometimes dodging losing trades. So, for example, when looking at the market structure, they say, well, I have the feeling that probably chances are not that high that the market will go long from here or go short from here, and then I'm taking out the system. The thing is, I could be completely wrong with that. So let's assume I skip one trade and then the result is plus 100 trades or so. So I have to write down minus 100. So that was, by the way, a topic at the beginning of February when volatility was really high. So that I tried to dodge this higher volatility. The interesting thing is I scored a good profit. I was profitable during this time. Nevertheless, if I just stuck to the basic strategy, I would have been even more profitable, even though I think I'd do it the same way again. Nevertheless, it's important to write it down, and then after several of those occasions, finally find out whether it makes sense to probably just keep the system running and do not intervene at all during times of high volatility, or if it's probably better to intervene here and take out the trades. But this is something where you can already see that my trading, even though it's discretionary, is really quantitative to some extent. Yes.
Oh, that's really great story behind, and maybe comment from my end here. What you realize, if Jens is talking about statistics, he's not looking for the day before yesterday or for 5 days and then drawing any conclusions. You see, Jens is talking about 50, 100 trading days or trades. And whenever you do analysis like that, you need statistics. And statistics is not looking for 5 numbers and drawing any conclusion out of that. You need much more numbers in order to have real statistics. So it's great how you approach that, and you are to some extent a strategy accelerator, or don't know how exactly to call it, but it's really great.
I really like it. Strategy accelerator is really nice.
And you see another aspect of a portfolio right now here. And now let's do exactly what I call statistics 1. And statistics 1 is if I look to a single day. And you see that we have an open short trade and we have long trade as well. You might think, does it make sense? And the answer is yes, it does. Because only then you have a better overall risk management, just to have the 2 strategies. So to have Jens here today trading long, but we have the breakout strategy of DAX and S&P 500, both now with a single position short. That makes sense, because that flattens overall your performance or your equity, and makes drawdowns smaller. Of course, only if those strategies are overall profitable. But of course they are. So that's another aspect. Diversification, even for the same underlying the same instrument, in this case DAX, we have that aspect within the JFD basket portfolio as well. That's one breakout strategy with 6 sub-strategies, and we have another one here for gold. And let's first start or have a look into the real account here, how it looks there. And we can go here. And you see, out of those 6 potential trades, we have one open, one pending order here still open, and you see what happens here. That's a nice thing to have that example today here. you see that we have a buy stop order here, and we have a breakout to the south. You may think, why don't we have a gold trade to the south? Okay, it would have been nice, yes, but first the reason why not. Since we look independently to long and short trades for gold, which is fundamental right, especially for gold, because finally the price of gold can only go north if nothing strange happens. You get a machine which can create gold out of whatever, then finally the price for gold should go north. That means, on the other hand, to have the same strategy long and short doesn't make sense. And in this case, we from the breakout scenario, we only have been allowed to make a buy stop order. In this case, of course, it's not triggered, but it is as it is. Finally, what we have within 1 year, from starting at 2000, we have a profit of a little bit less than 10%, which is still good. And it's one element within the portfolio here. If you have interest in all those parameters for those 6 sub-strategies within gold, so we have potentially 3 shorts and potentially 3 longs with different EMAs, with different risk-reward ratios, minimum ranges, and so on and so forth. You have all the details here, and you can download the slides or just send me an email and you get them. And I think I hope that it's self-explaining here. So we only trade those shorts if price is below EMA, and we only trade those long if the EMA, if the price is above the EMA. So that's the logic behind. And the minimum range is not that small, meaning that we don't have that many trades all the days. There might even periods that we have a couple of days in a row, no trade within that strategy. But if that is okay, because we have other potentials here as well. Those are the 2 strategies in more detail for today, but let me remind you that we have still those ebooks available for the breakout strategy Euro Japanese Yen, and you might remember the red curve within the strategy mix of I presented. It's really a great strategy. And the other one, not being discussed that much today, that is the DAX Day Week strategy. We have all the descriptions here within that book, and saying that which one is within the portfolio, the DAX Day Week strategy. It's the green one here. And you see steady growth, and then right now we are at 10%, and that in less than 1 year for that single strategy. So that's a nice combination, but that's of course not all. There's another aspect we have to care, and that's a quite important one. If you trade a portfolio, if you trade such a basket and you do it professional, then you have to manage your risk. That's a key thing you have always to be aware of, because risk is more or less everything, even if you are profitable with your sub strategies. And if you want to manage that risk, you try to build up such a portfolio out of individual strategies, you might have in principle 2 kind of approaches of how to get the weights for the strategy in order to set weights for a single strategy within the overall basket. So it's maybe for the one or the other, it's a luxury situation to have a couple of profitable strategies and not knowing the weighting factors for those. But in this case, it's an important question. And in our case, we have 9 sub-strategies. And what you can do is you can simply add them up with those weighting factors. So you get a combined equity curve. You can calculate the drawdown, and what you can even do, and it's more or less straightforward. You can find those 9 weighting factors, which finally give you at minimum drawdown the highest profit. Of course, we can do that, but that's not what we do. And what is the advantage? The advantage is you definitely get the best result at all. That's good. But since you put in the real history of the individual strategies, the risk of over-optimization within that procedure here is extremely high, because what you would do there is you try to have a going up peak in the one strategy, same time to going down in the other one, and then weight them that balances. But if something like that happened in the past, there's absolutely no guarantee that for the future those two events, like the one goes up, is extremely profitable, and the other one generates losing trades, so that flattens out once again. That's extremely low, the probability for that. So in principle, it gives you the best result, but it's not the way we decided to go for, because the risk of over-optimization is quite huge. What we did is instead, we said, let's concentrate on risk at all. So let's look for what are our losses maximum per day for a single strategy. So let's look exactly what was the worst day result for a single strategy. And then just set up one number. And that number we decided here is 1%. We are willing, or we would accept that the strategies in total would lose 1% in a single day as a maximum number. And then we can spread that 1% to all those individual strategies. It might be a little bit more clear doing so if we look how we have done it. And look for one example here. Euro Japanese yen breakout strategy. That is a count, number, starting amount, current amount, monthly growth for that single strategy. And now, very important, worst day result, 14 euros. Then we can do it on a percentage base. And then, knowing that the overall basket should have a risk per day of 1%, that means for that single strategy, we want to have maximum a 0.1%. Yeah, then we can trade exactly that number into the weight within the overall portfolio. For example, if I would put the weight 20%, then you would see, oh, that single strategy might result in a worst day result of nearly 0.3%, which is too high. All the single strategies are only allowed to have a worst day result of 0.1. So if worst comes to worst, those would sum up to 1%. And we are prepared even for that worst result, let's say ever. And if we put the weighting factor right, then that single strategy within the overall basket would only count for maximum 0.1% loss. And if all the strategies would have that worst day result simultaneously, finally, we would not exceed the 1% per day we set as a limit. And that's the way how we manage here our risk. And it works great. Just have a quick view on daily results here, starting at the 19th of February. You see the daily results as bars here within that graph. And if I would do a strange calculation like looking only for the minus days and building the average of those, then I get a number of 0.24%, which is fair enough. And you see that our worst day result up to now ever was a 0.5%. So that's a factor of 2 away from what should be allowed here, and so it works well. That's how we manage risk. And managing risk, I can only repeat myself here, is extremely important within any portfolio trading. Let me cover one additional topic. If you are interested in to participate within the JFD Basket portfolio, that's really quite easy. You just send an email to the support of JFD brokers, and you see the email address here that you want to open an account for JFD Basket portfolio. And if you are already a client of JFD, then it's even easier, because then you are already registered and you know that kind of legitimation process and everything is done. But if not, then people will guide you through that process as you open a normal account. And then the key figures that you know them if you are interested in that JFD Basket portfolio is there's a minimum account size of 2,500 euro, which is really a low number. If you think about wealth management at all, normally those things start maybe at 100K. So 100,000 euro upwards. And we have an annual management fee 2% of your invested money, and we have a performance fee of 25%. It may sound high, but it's the logic behind this high watermark, and that simply means if we have a very good months and we are reaching new highs, then you would have to pay. If you go down once again, of course, you don't have to pay a performance fee. And even if you go up, you still don't have to pay until we exceed the last high. So that's high watermark, and that's, I think, a fair solution for that. You can deposit or withdraw at any time money, and you can always have a live standing of your account via JFD. My JFD portal. So that's really a nice thing. And if you have further questions, just send me an email. That's easy, and we would like to help you there as much as we can. Oh, I see. It's already 8, at least German time. Let's go a little bit for the summary for today. So JFD Basket portfolio is, I would call it a wealth management for everybody, more or less. And you see how we do things. We have a portfolio of trading strategies, which are very big combination and very diversified combination, which is a great thing. And we have once again today presented 2 strategies in detail. And you see how they work, open range breakout strategies for DAX, S&P 500, and gold. And of course, still those other strategies are available. And if you just want to have those ebooks or slides or whatever, just send me an email. That's absolutely no problem here. To make sure that you get everything you want. Yeah, maybe Jens, do you have a final word on how you feel with the overall project of JFD Basket portfolio?
Yes, as already said yesterday in the German format, I'm in fact very proud to be part of this. And the main reason is in fact because this is not just, I think it's not only a wealth product for everybody, but it's something which is completely new to this industry. So there have been many managed accounts out there, and they were managed more or less from only one person, someone who considers himself a trader or was considered a trader from whoever, and just said, yes, I offer this, and got a licensed umbrella, let's say, and then offered the product. But in our case, it's really professional. It's a real professional solution, which means We are not only one person, but we are a team, and we are very, very professional when it comes to risk management around the deposits of the clients, for example, the strategies which are discussed in detail. So we're having a call at least once a week to discuss all these things. So it's let's call it really hedge fund-like somehow. And I think this is something to be, yeah, if you're part of this, to be really proud of. And that's exactly how I feel about it.
Okay, thanks, Jens. Once again, here to have you here. Yeah, so that was a second webinar about the JFD Basket portfolio, and you see that's exactly how JFD works. JFD, by the way, it stands for Just, Fair, and Direct. That are the three letters, and I would even add another letter, and that would be a T for transparent or transparency. That's what we try to achieve here, to really talk about everything frankly, to open our books, to have that view behind the scene so that you really know what's going on. If you want to be part of that, and that's really something totally different to any other I know, to have that kind of transparency here, even for wealth management, which is a good thing, I think. Okay, so that's for today. I hope we see you again at any kind of webinar of Jens, myself next week will be the next month. There's a big bundle of offerings around webinars. So right now it's time to say goodbye. Yes, that's all right. But to wish you a good evening and all the best for you. That's from my end.
Yes, and from my end too. So have a nice evening and hope to see you tomorrow in the morning meeting, 9:30 a.m. GMT, YouTube channel from JFD Brokers. I look forward to it.
Perfect. Bye-bye.
Okay, bye-bye, guys.